You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Bitcoin, Ether, Ripple, Litecoin, and more. Cryptocurrencies and other digital assets are taking the financial world by storm. This exploding market provides everything a savvy trader needs: volatility, volume, and liquidity. Provided you know how to find it. That's where we come in. Welcome to the Crypto Rundown. Each week, we'll break down the latest trading activity, trends, and developments on everything from coins to tokens, futures, and even OTC options. If it's moving the crypto markets, then you'll find it on the Crypto Rundown. This program is brought to you by Genesis Volatility, also known as GVOL, home of institutional-grade crypto options analytics. Whether you're trading CeFi options or DeFi options, cryptocurrencies move. Use GVOL Analytics to analyze implied volatility, model realized volatility, structure positions, and unlock alpha. For more information, visit gvol.io. That's GVOL.io. Now it's time to dive into the exploding world of cryptocurrencies and digital assets. It's time for the Crypto Rundown.
All right, everybody. That music means it is time once again for the Crypto Rundown here on the Options Insider Radio Network, the portion of our program where we move beyond our traditional stomping grounds of your Apples, your Teslas, your AMCs, your SPYs, all that fun stuff, your VIXs, and look a little bit farther afield into the world of crypto options. Going to break down the vol, the volume, the SKEW, the OI, all that good stuff, and a whole bunch more. My name is Mark Longo from the aforementioned network. Wanted to say another hello to all of our Pro and Options Insider Plus members out there. It's great to see so many of you. It's only been a couple of weeks now. So many of you have embarked on this journey with us. It's really been fun. It's really been fascinating, and seeing what you guys are looking forward to. All sorts of fun stuff. Your feedback has been fantastic. Again, only a couple of weeks down, a couple of great pro Q&A sessions, a couple of great options oddity segments, a lot more to go. Added a lot of new bells and whistles just even since last week. The new members hotline and the members live stream servers now. So a lot of cool stuff. You guys know where to go. Hopefully by now, if you want to learn more, theoptionsinsider.com/plus or /pro. Both of them will get you to the area where they'll explain exactly what's going on over there. We're still coming at you the old-fashioned way as well. You just get to choose. You get to pick your poison these days, how much content and how quickly you want it delivered in your ear hole. So theoptionsinsider.com/plus or /pro will get you there. /shop will get you to all of that fun stuff as well. And keep those questions and comments coming, particularly for all of you who have already joined on the pro journey. So we got that great Q&A coming up with the once and future Dr. Vix tomorrow. That's exclusive for you folks, so get those in via your members hotline now. And let's see who's joining us here to help break down the world of all things crypto today. I'm pleased to be joined once again by our old friend, Mr. Greg Magadini, the co-founder over there at Genesis Volatility, a.k.a. GVOL. Mr. Greg, welcome back to the program, sir. It's been a while.
Thanks, Mark. Very happy to be here.
Well, I'm glad to have you back on. Like I said, it's been a little bit. The last time you joined us here on the Crypto Rundown was back in late February of this year. A lot's gone on since then. We've had this mostly Musk-fueled rally and then sell-off in a lot of the big cryptocurrencies. Seeing some of that again today. We'll get to that in a little bit. And, of course, some interesting news on the GVOL front as well. You guys partnering up with the folks over there at LEDGERX. Maybe let's start there. Congratulations are in order, sir. Congratulations on that. Why don't you break down for our audience what you guys did and what this means for people out there who are fans of your analytics?
Yeah, absolutely. So LEDGERX team is a great team. We're very happy to be partnered with them. We've built out some analytics both in our dashboard and directly in their user interface for traders to use. So people can now see how SKEWs are priced, see how the term structure is priced, look at open interest for all different expirations, dig down to where the volume is in terms of expirations or in terms of strike prices, so on and so forth. So it's something we're really excited about, and we think that LEDGERX is going to keep growing, and I'm pretty sure they're launching Ethereum options pretty soon, which is something that everyone's excited about. And so we'll see where it goes.
So now if you're a LEDGERX user, you get access to the GVol analytics. Does it work the other way? Can I go into GVol and click that trade button yet?
No, GVol's roadmap is not to do anything on the execution side. We really just want to stick to the analytics side, but we're excited about these types of partnerships where we can redirect traders back to the exchanges or back to block trading services such as Paradigm to go ahead and execute over there on some of the ideas that they generate by looking at GVol charts.
A lot of good stuff in store for you guys. Glad to see so much evolution. And now it's time to dive into it, Greg. Let's do it. It is time for the Bitcoin Breakdown.
It's time to explore the latest trending activity, trends, and developments across the world's leading crypto market. It's time for the Bitcoin Breakdown.
All right, everybody. It's time to dive into the world's leading digital asset. Yes, it is time for the Bitcoin Breakdown. A lot of green on the old screen since our last show, which is a bit of a reprieve for all the bulls out there after seeing a lot of red on the screen over the past couple of weeks, and indeed over the past month. April, one of the bloodiest April in the history of the crypto space out there. So a lot of red out there of late this week. A little bit of green on the screen coming into showtime. We had Bitcoin just a tick shy of the 40K levels, 39,973. Puts it up nearly 4,400 handles from our last show. So a nice little run. Of course, a lot of that on the heels of, this ongoing will he, won't he Musk dance with Bitcoin continues today. Apparently today he's in the will he phase, saying someday in the indeterminate future, when Bitcoin can somehow get to some unprovable level of 50% of the mining is done with some sort of energy efficient power, when all of that can somehow be done, then and only then will they start taking crypto again at Tesla. So a lot of this nonsense thrown out there into the ether, pun intended, but that was enough to really spark a bit of a rally, roughly 10% on the screen out there. So, Greg, this is kind of a long way around to saying, you haven't joined us since February. Since your last appearance, a lot of this has been going on in the Bitcoin space. We saw really the ramping up of the Musk/Tesla fueled rally in Bitcoin that led us up to those lofty heights of 65,000. And then, of course, he soured on it, and China did as well. And not that that's a new story. And we drove right back down to about almost 30,000 again. So there's been a lot of volatility, a lot of drama in the Bitcoin space since your last appearance in mid to late February. So maybe let's start there. Catch us up. What's been catching your eye from a volatility, from a SKEW, and all these other perspectives as we've seen Bitcoin just march all the way to such lofty highs and then come roaring right back down again, Greg?
Yeah, a lot of interesting stuff. Absolutely. So there's Tesla. There's a lot of other corporations adding Bitcoin to their balance sheet. Back in February, March, April, that really drove spot prices higher. And we had this sort of correlation with implied vol rallying as prices rally. And so you could see implied vol rally, you could see SKEW rally, and it was kind of just a fear of missing out, buying calls, buying spot, and also paying huge premiums on the cash and carry basis trade. So for example, there you could buy the spot, sell the future, and collect about a 20% annualized, essentially risk-free trade minus the counterparty risk. So you kind of had this euphoric enthusiasm to buy crypto. So that's kind of how we saw that up until mid-May when we had this huge crash. So now it's completely the opposite. We had a huge spike in vol on the downside, which is the first time we had it in quite a while. So we saw ETH and Bitcoin vol, exceed 150% mark. I think above the 220 mark on Ether. And so it's kind of like this panic optionality buying for downside protection. And then we saw the SKEW become super negative, much more negative than we've seen it since probably March 2020. And so it's kind of been a wild ride on the upside and then a wild ride right back to the downside. And I think now it's finally kind of settling. People are trading the range and letting things sort of calm down a little bit while we figure out what the next move is.
I have to imagine, just selfishly from your perspective, Greg, this has to have been a good development for you guys over there at GVOL. I mean, if anything is going to prove the value of analytics and understanding what's going on from a Bitcoin vol perspective, the last few months are certainly going to do that. So I'm sure you saw a lot more interest in your platform as a result there, Greg.
Absolutely. We're seeing interest in, looking at volatility from the Bitcoin side and then looking at just options in general from the Bitcoin side. So just to kind of give our listeners a point of comparison, for example, the VIX, which is the S&P 500 or the SPX volatility index, right now it's trading below the 17 handle, and Bitcoin vol is still in the 90s. So you have this huge volatility premium for crypto, and measuring and seeing how these curves trade in different market environments is super important for options traders, because the vol juice is so high that it makes sense to sort of pick your spots and find smart plays to do in the vol space.
Speaking of smart plays, we're going to get into some of these analytics, all these brought to you by a platform you're probably pretty familiar with by now, GVOL. Of course, you can check it out for yourselves, gvol.io. It's a place to go to kick the tires and light the fires. You can see all this data for yourself in between episodes of this program. Let's get on out to the vol side first. Again, I said it before, I'll say it again, Greg. I love the way you guys parse a lot of these analytics, including like the 1 hour. It's kind of a nice snapshot of volatility. You don't see that in a lot of products out there, but you can do that in the crypto space. And the hourly flow of volatility is certainly an interesting and indeed a meaningful metric sometimes, particularly in a product like Bitcoin that tends to have some pretty aggressive vol out there. And on our last show, it was at about an 88%. Remember, this has kind of been an interesting area of analysis. I'd be curious to get your thoughts on this as well, Greg, because for the last couple of months, outside of the mad sell-off that began in April, leading into that, there was a lot of discussion, about is Bitcoin becoming, at least from a vol perspective, a bit of a gold. Digital gold has always been the analogy people have made between Bitcoin and gold from a correlation, all sorts of other perspectives. But what was intriguing to me was that it was starting to behave like it from a vol perspective, which is when gold would ever catch a bid from a vol perspective, particularly over the last couple of years, it was usually very short-lived. It'd be pretty violent, and then it would come right back down the other side, and it would kind of languish again at whatever level it had been trading at before. And we started to see Bitcoin doing that as well. It was languishing in the 70-odd% vol, maybe 80-odd%, got down into the 60s very briefly, and we would have some spikes that were kind of very short-lived, and it came right back down. Obviously, for a couple of weeks there, we had a nice little extended run of volatility out there in Bitcoin, but now coming into the show again, we're seeing a little bit of interest out there from a vol perspective. On our last show, it was looking a little light again. It was at an 88%. It spiked to a little more than triple digits again in between shows, listeners, up to about 113%. And coming into today's show, it's just a tick under the triple digits level at a 99% right now. So Bitcoin looking a little frothy again. It's hard to argue with that. It's moving 10+% or so today already. So it's moving again, which is kind of nice. But Greg, was that something you guys were noticing over there at Genesis Volatility as well, as right before the mad sell-off commenced? And maybe a little bit after it as well, were you starting to see from a vol perspective, Bitcoin maybe starting to play out a little bit like gold?
As far as relatively speaking in the crypto space, I think that's spot on. And I think fundamentally that makes a lot of sense too. So if we think of Bitcoin in, a $200 billion market cap, or Bitcoin 10,000, it makes sense that it's more volatile because it doesn't take as much money to sort of move the price around. Then as Bitcoin kind of grows its market cap, we would expect volatility to kind of come down because there's more adoption, there's more traders, there's more people holding it, there's more liquidity, there's more market cap size. So theoretically, that should bode well for diminishing volatility. Quite frankly, it was surprising to see that Bitcoin could drop 50% from 60K down to 30K just like it had done back in March 2020 when it was, went from 10,000 to below 5,000. So it kind of displayed the same amount of volatility despite the much larger market cap and the much broader adoption in the crypto space. So crypto vol is nothing to sneeze at, and it could still come. It seems that despite how big the market cap got, the vol could still come in at any time.
Yeah, that's the interesting point to really make out here. The joke, the adage is that Bitcoin is just another word for volatility out there these days. Yet for the last couple of months, it hasn't really managed to maintain those lofty levels for very long. We'll see if that's going to shift, if we're heading into another regime out here from a vol perspective. Like I said, we're threatening the triple digits right now. So that alone, outside of these spikes, is a pretty lofty level, much higher than the 69% it hit not too long ago out there. So perhaps we're transitioning to another higher regime of volatility right now. But still, it has been interesting to watch that for a while there, Bitcoin vol could not sustain any of these spikes that we saw out there. Let's see if that's going to be the case going forward. Speaking of going forwards, look out there at all things SKEW. Of course, the 30-20 SKEW listeners are breaking down all the options in the 30 delta to the 20 delta strip out there on the call and the put side. We've broken it down with Greg here before on the show, why they choose to go that way versus the traditional 25 delta. Check out some of the archives of the show if you want to hear more about that. Coming into our last show, we were looking at a -6.5 today. It's almost flat. It was about almost zero. It was about a -0.15 kicking off the start of the show. So a lot of evolution out there in the SKEW side. That's something else you mentioned that kind of caught my ear there, Greg, as well. That's a metric we've been watching for a while as well, is the SKEW and also what that reflected from an overall trading activity perspective. And leading into a lot of the big sell-off, we did see a lot of interest getting into the put side. For a while there, OI on Bitcoin was almost neck and neck put to call, which is something we haven't really seen before, at least not for a sustained period of time. Bitcoin is pretty much usually all calls all the time, particularly longer term. But heading into the big sell-off, we did see a lot more people flocking into the puts, and that was certainly merited as it turned out. So what was really catching your eye and what really stood out to you in the massive evolutions in the Bitcoin SKEW we've seen over the past couple of months, Greg?
Yeah, so we actually wrote about this a couple of weeks before the sell-off. It actually seemed like Bitcoin option traders were a little bit more pessimistic on Bitcoin versus Ethereum. So oftentimes in our newsletter, we like to just compare the two markets because they are the two most liquid crypto options market. And we could see that the SKEW on shorter dated Bitcoin options was a lot more negative for Bitcoin than it was for Ethereum. So that was something that was kind of interesting, that sort of divergence there. But traditionally speaking, the crypto space has just this massive positive SKEW, meaning that the calls are more bid than the puts, especially for long dated options. And right now, this is one of the few times where that isn't the case. So almost through all expirations, with the exception of maybe March 2020 or December 2021 expirations, almost all the SKEWs are in the negative territory, meaning that the puts are more expensive. Something else to keep in mind with these crypto options is that there's kind of two compounding factors as well. So there's the SKEW, which is historically very positive to the call side. And then there's this sort of forward pricing of the futures, which is also usually very expensive to the call side. So typically the futures are to the upside. Typically the futures are in contango, meaning that the longer dated futures trade at a pretty significant premium to the spot market. And so when there's sort of this reversal in sentiment, there's kind of two factors that coincide together. People start selling down the basis and sometimes even putting the basis into negative territory. And at the same time, people are buying puts and causing their put SKEW to go bid to the put side. So there's kind of like two things. So the forward price gets a lot closer to your put strikes, and the put SKEW also pumps the implied volatility to the put side. So when these reversals happen, if you're on the wrong side of that, it can get nasty pretty quick.
Yeah, we certainly saw that, a bit of a double whammy not too long ago out there, hence why Bitcoin can have these massive intraday swings, which I know spook a lot of people out there who are just dipping their toes in these markets and in these waters for the first time. Looking out from an OI perspective, hasn't been, outside of really today's session, hasn't been the most rock'em sock'em robots week out there from an overall crypto options perspective. The hourly OI in our last show about 151,000, coming into today's show about 157,000, so about roughly 6,000 or so contract change. Looking out from a breakdown, calls versus puts, about 98, almost 98,000 on the call side. It's up about 5,000, and the put side about 61,000, up about 1,000 or so. So both of those up slightly, but not a ton out there as well. Calls obviously maintaining their lead over puts right now, but that certainly makes a lot of sense as we have sold off, as Greg alluded to, roughly 50% outside of today's rally notwithstanding. Since those highs of 65,000, we obviously blew through a lot of put strikes on the way down, so it makes sense that folks, if they're sane, would take those off. And that's exactly what we saw right now. Not a lot of new positioning yet on the put side, but we'll see. Give it time. We are up to the 40,000 level, close to it again. Maybe that'll start inspiring some more put paper. In terms of where you folks are lining up from a monthly expiration perspective, where are you putting all your liquidity these days? Bitcoin's looking a lot like ETH from this perspective, in that it's kind of all quarterlies all the time. Once again, June, the big dog, even though it hasn't really increased that much since our last show, 64,000 contracts open in June for your number 1 month, up about 4,000 from last show. It's not a huge bump there. DECE number 2, 28,000, up about 2,000. You got SEP number 3 at about 22,000, pretty much unched since our last show. So that's pretty much the same as it was last week. June, DECE, and September kind of holding down the show here from an overall options liquidity perspective. You folks not loving anything outside of the quarterlies right now. In terms of a notional value of that OI, again, it's increased a little bit. So we've seen a little bit of an increase in the overall OI. Obviously, Bitcoin ticking up a little bit. That tends to help a bit as well. The overall value of the OI on Deribit was about 5 billion on our last show, about nearly 6 billion total. Coming into today's show, Deribit has about 6 billion worth of value on it, and talking about 7 billion if you add in all of the other venues out there today. Again, getting back to the week that was, not the most rock'em sock'em robots week. We saw the most active day was back on the 9th, about 732 million worth of notional volume going up. That's pretty much in line with the previous week we saw, which is about 723 million. You got to go back a little bit to mid-May, May 17th, to get a really active day. That was about 3 billion worth of notional going. That was a record at the time. We're nowhere near that right now. So it's kind of, a bit of a shrug your shoulders kind of week out there from an overall volume perspective. Something similar with the strikes out there as well. Obviously, we've jumped around the strike chain a little bit over the course of the past couple of months out there in Bitcoin land. Yet the top 5 pretty much the same from what they were last week, with the exception of one. We'll get to that in a second. The number 1 OI strike right now, the size strike in Bitcoin, remains the 40,000 strikes, almost 11,000 contracts open, about 10,800. That's up about exactly 1,000. And again, given the fact that we're threatening it right now coming into the showtime, probably no surprise that strike is the number 1. The number 2, though, still one of these, shall we say, optimistic strikes out there. That's the 100K strike. Yes, it's still number 2, about 9,300 contracts open up. That's off about 500 or so from last show. So some folks still holding out hope for that par strike out there. Number 3, cutting that in half, the 50,000 strike, about 9,200 contracts open. That's up a few hundred from last week, but not a big change there as well. Number 4, 60,000 back. We were hanging our hat not too long ago. 8,200 contracts open there. It's up about 1,000, so a little bit more positioning on the 60,000 strike. And then rounding out our top 5, a new addition to the top 5 this week, the 20K strike. Weren't talking about that too long ago, and now it's on the radar, especially when we were threatening 30K not too long ago. 7,300 contracts open there for your number 5. Greg, any of these stats from an overall strike perspective surprise you? I mean, obviously this is your data, so it probably shouldn't surprise you. But at the very least, does it intrigue you that, let's say, there's still so much size OI open on some, shall we say, optimistic strikes like the 100,000 strike, Greg?
Yeah, definitely. I think people still are really gunning for that 100,000. We'll see. I mean, I'm sure it comes at some point. I'm just not sure if it comes before the options expiration for these particular contracts, but that is definitely the level that people like to look at. So some of the stuff that we've been actually seeing today, because today was a pretty positive day, we've been seeing some interesting block flow go through on Paradigm, which is kind of the platform where people trade block trades. people are really buying some $48,000, $64,000 call spreads. So those are trading for about $3,500 for a December expiration. And so, if we go back and test the highs, that's actually a pretty decent trade. I mean, you make about $16,000 on a $3,500 investment, or get back $16,000. So that can be a pretty interesting type of trade if we go back to the highs by the end of the year. Something else that really sticks out, talking about that $40,000 call, we've been seeing some straddles trade at the $40,000 call. $40,000 strike, both the call and the put. And so you can trade both the call and the put at $40,000, which is where we're at right now, and that premium is $22,000. So those are pretty expensive straddles for December expiration. Now, can we get beyond 62 or below 18? Maybe. I mean, this is crypto after all, but I think those are pretty pricey straddles, and that gives a really good kind of dollar context in how expensive volatility still is at these prices.
That's a pretty juicy straddle. You need a lot of bang for your buck very quickly for those bad boys to break. Wow, 22K. That you're talking half of your strike value there. You really need to want it to pick up those listeners. But you're right, the 40K strike is still number one. So clearly some folks are drawn to that strike. I do like that vertical. You're right, a little bit better than, shall we say, just straight up loading up on these par strikes. That's a bit of a bridge too far for me. I'm going to be charitable and say, like you mentioned, that kind of the aggressive velocity of the sell-off. I think a lot of these people maybe just got caught unawares and weren't able to close out their positions before it was kind of too late. And now they're kind of left holding the bag there. So yeah, crazy stuff afoot. Of course, if that 40K straddle can work out to the upside, maybe those pars not going to be looking as bad going forward. Speaking of things that are not looking great going forward, you haven't seen a ton of paper out there on the CME options front as well, not the futures really as well. Light volume on the options front at CME this week, not a lot of paper really there to parse. A similar story out there on the futures front. So the busiest day was pretty much right after our show last week on the 8th. Last week we saw about 12,000 futures changing. That's the big future now. And not much more than that pretty much the rest of the week. So again, kind of a light period out there from a volume perspective. Today notwithstanding, same deal on the micro futures, which I know a lot of you are paying keen attention to. That's a little bit more, shall we say, bite size for a lot of the audience of this show. 1/50th the size of their other futures contract. That shows you just how big and how beefy that regular 5X CME Bitcoin contract is. That's a huge contract. The busiest day for that was also the 8th last week, with roughly 30,000 contracts on the tape there. So some decent paper starting to make its way into the micro. If that keeps up, we see more days of that, maybe threatening the 50K threshold and beyond, which it has hit a few times in the past. That might help accelerate the conversation around the micro Bitcoin options, which I know a lot of you are keenly interested in out there. Greg, I know last time we chatted, you were planning on adding some more hooks out there into all the CME crypto ecosystem. How's that going on the Genesis volatility front, sir?
Yep, it's still on the roadmap. It should be in pretty soon here. We've been working with CME for a while just to kind of dot all our I's and cross all our T's to start incorporating this data. We're definitely excited by these micro futures. It seems like micro futures are probably the way to go. It's just funny that that big future, when it was launched, we traded up to $20,000 and then launched that future. And then for a long time, Bitcoin was around 10,000. So $50,000 contract isn't quite the same as when we were at a $300,000 contract when Bitcoin was at 60,000. So the market environment changed pretty quick to make that contract just almost unusable for most people who are in the retail side of things.
Yeah, definitely a very different beast with Bitcoin around 65,000 than was, you're right, around the 3,000 to 10,000 range, which it was for a lot of the lifespan of that future. All right, now it's time to close the book on Bitcoin, at least for now, and keep on rolling out to explore the altcoin universe.
It's time to move beyond Bitcoin and find out what's moving the rest of the crypto marketplace. It's time to boldly venture into the altcoin universe.
All right, everybody, let's do it. Let's dive into the altcoin universe. Let's start here really with the top 10 here in all things Bitcoin. Remember, take these market caps with a tasty grain of salt, but the rankings, I think, are where the merit really lies here. Number 10, got some new interesting ones breaking into the top 10 this week. Sol, ticker symbol SOL out there, Solana, number 10, with roughly 10.7 billion worth of market cap. Number 9, it's our old friend Litecoin, holding roughly firm at about 11.7 billion. Number 8, Bitcoin Cash, also hanging out there around 11.7 billion. Number 7 is Polkadot. Now we're jumping up to about 23.5 billion. Number 6, XRP, an interesting one. A lot of stuff going on in XRP land. I know a lot of you in the US here having a hard time getting your hands on XRP, but it's rocking and rolling here to the tune of about 41.25 billion, the number 6 spot on our top 10 in the altcoin universe. Number 5, it's the quote-unquote product people love or love to hate. It's Doge. 42, a little north of 42 billion out here for Doge. Number 4, it's Cardano, just a tick under 50 billion. Number 3, Binance Coin, 56.5 billion. Then number 2, it's ETH at just a couple billion shy of the 300B level. And number 1, Bitcoin, looking a little bit better than it did last week, but still a far cry from the 1T level at around 750 billion. Let's get on out now to, I know, your favorite stopping point in the altcoin universe, Greg. That is ETH. An interesting week. ETH's had some interesting fluctuations going on, breaking the 2,500 level not too long ago, getting down, threatening to break the 2,000 level again. I know a few weeks prior to that, it got down to around the 1,700 level. So it's had some interesting fluctuations of late. Coming into today's show, we're actually seeing ETH down roughly 150 handles from our last show. We were at pretty much exactly 2,700 last week, and coming into today's show, it has rallied a bit today, up to about 2,550, 2,560, down almost 145 handles from our last show. Didn't quite get to the lows that we had the previous week. I think the low this week was around 2,280 or so, but still interesting stuff. I know, Greg, you guys really spend a lot of time focusing on ETH. That's the product that really has captured your fascination. Pretty big sell-off and pretty big movements, pretty big vol explosion out there in ETH as well since your last appearance. So catch us up. What's really been lighting up your tape up there in ETH land since the last time you joined us, sir?
Yeah, so actually this year we've seen such a big pickup in Ethereum options volume. The sort of appetite to participate in ETH has been a lot greater this year than it was last year, which has kind of been my personal thesis for a long time, that Ethereum has a kind of more promise than Bitcoin in the long term, because you can build stuff on top of it. But it definitely seems like the market has been sort of waking up to that sort of opinion that I have. So we had, in the past few weeks, we had Goldman Sachs say that they think that Ethereum is promising, and they could see it overtake the Bitcoin market dominance. Same thing with Carl Icahn, who's saying that he wants to get crypto exposure, and Ethereum seems to be one of the most interesting to him. You have people like Mark Cuban who are investing in Ethereum layer 2 solutions. And so it's pretty interesting from that perspective. Not that, these traditional finance people are the best people to listen to in crypto, but there's just a lot of development and sort of mainstreaming that's becoming built on top of Ethereum. So if you think of the whole NFT craze, all that's pretty much built on Ethereum. You could think of the whole DeFi craze, all built on top of Ethereum. All the ERC20 tokens are all built on top of Ethereum. And so there's just kind of a lot of infrastructure, or like ETH is the underlying infrastructure for a lot of the latest Lego blocks that are built on top of it. And then kind of fundamentally speaking, we have some really interesting developments coming forward as well. So we should have this EIP 1559 upgrade in July, which is basically creates a part of each transaction fee burns Ethereum. So instead of going directly to miners, part of it gets taken out of the ecosystem. So now you have Ethereum Ethereum, which has a kind of a perpetual inflation rate, is now partially offset by this deflationary force, which decreases the supply based on each transaction. And then you have this kind of whole new narrative around proof of work versus proof of stake and what's better for the environment. And proof of stake is the solution for clean tech cryptocurrencies. And that's something that Ethereum is, already working on in terms of launching the beacon chain for Ethereum 2.0. And then Ethereum 2.0 theoretically will become a really nice scaling solution for kind of how Ethereum is run right now. And lastly, sort of like this last part, this Ethereum scaling solution is kind of still the big hurdle for Ethereum. So a lot of people who trade on Ethereum or use Ethereum decentralized apps will notice that transaction fees are really expensive. And so once that scaling solution comes through, that solves that problem as well. So we think that ETH has a lot of promise, and it's just kind of a matter of time until the market wakes up to the reality that, in my personal opinion, ETH will probably be the largest crypto by market cap.
Certainly seems to be having a good run here, at least today. But you're right. It does seem like a lot of the voices out there in the crypto space. You know, we've said it for a lot of our guests have said something similar out there. Bitcoin's kind of the poster child that's out there to collect all the slings and arrows, both pro and against crypto, also to kind of face all the regulatory hurdles, maybe break those down. And in its wake can come other products, perhaps ETH, that can really benefit from all that and really maybe take things to the next level. And unfortunately, it wasn't next level from an overall volume perspective out here over the course of the past week. Another kind of overall light week. Same deal on the ETH futures front at CME that we saw out there. On the Bitcoin futures as well, the big day was the 8th, with about this time on the ETH side, it was only 4,200 contracts. The OI is looking right out there, about 3,500 contracts. So the ETH futures are off to a decent start, even if the last week or two hasn't exactly been super robust. We'll see if today's move to the upside can maybe change that. Looking at it from an overall vol perspective, the 1 hour vol on our last show is at about a 116. So ETH's kind of been structurally more volatile than Bitcoin for a while. That trend is continuing. It spiked up to a pretty impressive level, not quite the 200+% we saw it spike up to on our last show, but it spiked up to about 143% on the 8th last week when it was getting a little bit more action out there. So a little bit more volatile to be found out there in the ETH landscape. Coming into today's show, it's about unched to where it was last week, about a 115 out there. So still north of the triple digits level from an hourly vol perspective. SKEW, same deal as what we saw with Bitcoin. It was predominantly negative on our last show, about negative 5.5, and coming in today's show, about a 5. So it hasn't really changed as much as what we saw out there on the Bitcoin front. Again, notional volume wise, same deal. Not a lot of paper hitting the tape over the course of the past week. June 8th, the busiest day over there on Deribit, which is still the big dog for ETH options, trading about 277 million worth of notional. That's a lot less than the 1 billion we saw going up back in May, a couple of times back there in May. So not quite at those levels yet. Maybe need another little shock to the system or another big rally to the upside, either way, to really spark some more life out here. These are also reflected in the overall OI numbers out here in ETH options. The calls coming into today's show at about 805,000. That's up about 1,000. And the puts are at 547,000. That's down about 1,000. So we're pretty much unched from an OI perspective out here. Again, notional value of the OI, same story as we saw. The volume, not exactly tearing it up, so you're not going to expect the notional value to increase. In fact, it's down about $1 billion from what it was this time last week. It was about $4 billion this week, about $3 billion. Where you guys are lining up from an expiration perspective, similar story to Bitcoin, all quarterlies all the time. June still number one with about 585,000, actually 586,000 contracts open. It's up about 19,000 from last show. DECE at 283. That's pretty much unched. So a lot of your opening paper has pretty much been in June. And then SEP, same deal, 198,000 kind of unched as well. So a little bit of back and forth in June, not so much, a little bit farther out the curve here. In terms of strikes, where you folks are lining up your options paper right now, again, kind of a similar story to last week. The 5,000 strike, still number one. I guess that's the equivalent of the par strike out there. 72,000 contracts still open on the 5,000 strike. That's pretty much unched from what it was this time last week. Could be a similar story to Bitcoin in that we kind of moved so aggressively away from that strike a few weeks ago now that some folks maybe got caught flat-footed out there, and now they're holding on that strike. Either way, 72,000, still number one, hasn't really changed since last week. Number two, the comparatively more relevant 3,200 strike, almost 70,000 contracts open there. It's up about 3,000 from last week. Then the rest of them are all pretty much the same and all unched from last week. It's still the 400 strike for number three, still the 320 strike for number four, both around 62,000 contracts, both of them unched from last week. Whoever's holding on to those strikes / vertical, whatever it is, they haven't touched it. And the number 5 is the 480 strike yet again here in ETH with about 52,400, again, unchanged from last week. So not a lot of relevant strikes in our top 5 these days, Greg. What's catching your eye out there from an overall ETH options and positioning perspective these days, sir?
Yeah, well, when we look at the block flow, a lot of it has been now in the basis. So people have been trading the basis a lot in Ethereum, both in terms of outright futures and sort of these deep in the money calls to get a basis exposure as well via the options. So there's a lot of that going on. In terms of what's kind of catching our eyes, we're still seeing a more positive skew for Ethereum. So whereas Bitcoin might be negative skew or symmetrical around 90 days and 90 days out, ETH is pretty much positive 90 days out and beyond. So there's still a little bit more upside appetite for calls, especially in those longer dated options. And then we've seen in the term structure something that's pretty interesting. So, for example, the term structure seems to be very rich around September, which is something that, you know, in the traditional stock market, having sort of a hump in the term structure would coincide nicely with, you know, earnings or some sort of event. But in Ethereum, that seems a little bit surprising because sort of the big upgrade, which is going to be that EIP 1559 that I mentioned earlier, that's set to happen in July, at worst, probably early August. But the vol is sort of spiked up for this September expiration. So there seems to be some sort of opportunity there in the term structure. You know, maybe you buy some August volatility and you sell some September volatility to finance it, or you decide to be short vol or do a covered call or something like that, and you decide to sell the September expiration because it's the richest point on the curve. So that seems to be some opportunity there that we think is promising.
Speaking of promising, I know you're a big fan of ETH and, of course, the ecosystem that has built off of it, of course, the DeFi ecosystem. Anything catching your eye out there in the land of DeFi over the past few months, Greg, that you want to share with our audience these days?
Yeah, I mean, the DeFi space is heating up really nicely. So there's a lot of DeFi option projects. There's a couple ones out there. I think you had Pause on your podcast. They're really interesting DeFi options project. They've just launched on a layer 2 solution called Polygon, aka Matic. So that's very interesting. Another one is called Siren. It's another sort of DeFi option project built with sort of option pools where the liquidity providers will provide collateral in a pool, and then people will buy options against that pool, and everything is fully collateralized. That's another DeFi option project. And then there's a couple other ones. One's called Open, which you've also had on your podcast, and another one's called LEDGERX. All these projects are super interesting for trading options directly on chain. We think those are, you know, provide a lot of promise, and not only that, but they provide a lot of like inefficiencies and opportunities in the options market that you couldn't find elsewhere. Something else that's really nice about sort of these projects is you can start trading altcoin options. So ERC20 options that you can't find anywhere else. So if you want to buy a Uniswap option, you can do that using a DeFi option protocol. Something else that's really cool is sort of futures markets being built in DeFi. So DYDX is sort of this very well-known DeFi project who just launched a perpetual future. So basically the perpetual, you could think of it as like a regular futures contract, but without an expiration date. And instead of an expiration, the differential or the basis gets paid out via funding rate every day. So those have just launched on DYDX. Those are live. And so I think it's a very interesting development to have sort of a margin product on chain. So that's something worth checking out as well.
Speaking of checking things out, it is time to check out what you folks have on your brain. It is time to answer your crypto questions.
You've got questions about crypto. Who doesn't? It's time to find out the answers to your crypto questions.
All right, everybody, let's see what you folks have on the brain. First up, the question, we're just talking about ETH. A lot of ETH questions, it seems like, Greg. So maybe you have a well-timed appearance here on the show today. First up, we got Jam-Packed. He wants to know, is the ETH future at CME a micro or a quote-unquote biggie? I like that, the biggie future. Well, I guess to use your vernacular there, Jam-Packed, it's a biggie. The contract size is 50 ETH. So that's a lot. I mean, we're just talking right now, it's right around 2,500 here at Showtime. So you're talking about $125,000 worth of value jam-packed into that contract. So that's not exactly a retail bite-size type of contract. That's why I think a lot of people are pretty fascinated with the micro Bitcoin future they just launched. It's not 5x Bitcoin. It's 1/10 of a Bitcoin, or actually 1/50th of what the traditional contract is there. So a lot more accessible, I think, to most of you out there. I would expect to see probably something similar once the ETH futures really start taking off, something similar added to the ETH ecosystem as well, just to make it. I mean, they at CME, it's obvious they love all things micro because you folks love them. You folks are trading them up. The micro equity futures, they can't list enough of those things. You folks are devouring those. So they see it. They see that everything small is big. So they're probably going to be leaning that way. But right now, it's not quite the bite-sized contract you may be hoping for. But stay tuned. It could get there. Just give it a little bit more volume on the quote-unquote biggie first. and then we'll get there. All right, next up, this is a good one for you, Greg, because this is right up your alley. This comes from Anthem 874. We got good handles on the show today as well. They want to know, what do you guys think of ETH Classic? And are there options available? Well, Greg, you're just talking about the kind of DeFi ecosystem out there. You know, there's no real listed. Let's go to the second part first. There's no real listed. You can't really go on like a Deribit and buy like a liquid ETH Classic option, at least not that I've seen. So maybe there are some other options, pun intended, floating around out there for folks who want to trade options on ETH Classic. And then B, we haven't really talked about ETH Classic on the show, so maybe we should start there. You know, maybe explain really quickly to our audience what the heck ETH Classic is, and then B, what are your thoughts on it?
Yeah, definitely. I'd love to. So ETH Classic was born out of the DAO hack. So the DAO was back in 2016. It was or maybe late 2015. I forget the date exactly, but it was one of the earliest ICO projects. And so everyone sent in ETH to sort of invest in this ICO project. And then that project got hacked and everyone started losing their funds from the pool where they sent their ETH to participate. And so what the ETH community did is that they did a hard fork, which basically rolled back the hack and basically undid the blockchain in order to refund everyone's funds. But a lot of miners were saying, hey, this goes against, the thesis of crypto where code is law and everything is immutable. And so those miners decided to persist with the hacked chain, and this became Ether Classic. It's actually the original Ether that didn't have the hack rolled back. So that's how Ether Classic was born. But the whole Ethereum Foundation and most of the developers, they all moved over to this now what we know as ETH chain and continue to build on that. So that's kind of the genesis of Ether Classic. When we talk about Ether Classic options or some DeFi projects built on Ether Classic, I would say one big point of caution is that make sure you know which chain you're dealing with, because if you send real Ether to an Ether Classic address, you basically lose your funds. Vice versa, if you send Ether Classic to a real Ether address, your funds are basically gone. So you got to be really careful when you're dealing with the two. But theoretically, it is possible you could do some wrapped Ether Classic, which is basically, when they say wrapped, is that they store it somewhere and then issue shares. You can think of it as an ETF holding the Ether Classic that trades on the Ethereum chain. That's the best analogy. And so theoretically, that would be possible. Kind of the latest thing that kind of makes me weary of Ether Classic is that I think it's back in 2019, there was a 51% attack. So basically the consensus rule of crypto blockchains is that the longest chain is the true chain. And so if you have more mining power than the rest of the chain, if you own more than 51% of the mining power, theoretically, you could discover the most blocks because you have the most hash power. And if you can do that, then you can basically rewrite the blockchain. So you can undo transactions, double spend currencies, blah, 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 blah. And your chain is correct because it's the longest chain. So back in 2019, someone borrowed mining power. So there's these big mining pools and you can buy hashing power. Someone bought the hashing power and basically did a bunch of double spends, controlled more than 51% of the network, and they were able to basically hack the Ether Classic blockchain. And that's basically because there's not enough participants or miners in the Ether Classic blockchain that it sort of enabled that vector of attack. So that's something to keep in mind with Ether Classic. It's not as secure because there's not as much node participation, stuff like that. Kind of my last point here. There is, if I was Elon Musk or some other billionaire and I wanted to, compete with Ether, what I would probably do is just buy a bunch of Ether Classic and then start a bunch of Ether Classic nodes and basically have a competing blockchain. So I definitely think there's this sort of opportunity there for Ether Classic to gain adoption. But as of right now, those are some of the things you should think about if you invest in Ether Classic.
Yeah, I think a lot of people are just attracted. They saw the run up in ETH and then they saw something that had a similar name to it that was trading at roughly 140th, 150th the value, right? So that clearly was attractive to them. There was worth the risk of hacking and everything else if you could get in at roughly 150th the price. So I can see why you're attracted there. Who was at Anthem 874, even though, yeah, from an options perspective and certainly from an overall volume perspective, nowhere near the same level. And of course, not quite the same thing either. So bear that in mind. All right, we got some people writing in. Let's squeeze in a few more, Greg, before we wrap up. Let's go. Next up, we got PCG. They said, remember reading a lot about ETH 10,000 strike trading a few months ago. Is that still a hot strike in ETH or have people moved on from it? Well, it wasn't in our top 5. You heard us just break down there, PCG. So maybe that should give you some inclination. In fact, we pulled it up for you right before the show here just to check. And the ETH 10,000 strike had about 26,000 contracts open. So it's not nothing by any means, but it's also a way outside of the top 5. In fact, it'd probably be number 14 or 15 if you added up all of the hot strikes out there. So the ETH 10,000 strike, not quite perhaps the marching cry that it was a few months ago. It seems like the 5,000 strike has pretty much usurped that. Is that your takeaway as well, Greg? Folks are more focused on 5,000 than they are on 10,000 right now in ETH.
Yeah, definitely. From an OI perspective, I think 5,000 is an actual realistic strike and pretty interesting. From a pure, I want to trade Vegas, there's people trading all the way out on the $50,000 strikes. And so those way out of the money options can become really interesting. So if you think about your normal standard distribution, you think of something that's, 6, 7 standard deviations out, something crazy like that, but then you increase vol by 50% or 50 points. Well, something that was, 6 standard deviations out might now be 2.5 standard deviations out. And so you get a lot of bang for your buck in terms of percentage return on investment and those way out of the money strikes. But those are definitely speculative and you gotta be right.
Yeah, ETH 50,000. That's shall we say an optimistic strike, to put it mildly. There were one more here. Let's go one for you here, Greg, because this is right up your alley. This one comes from Max. No creative name there, just Max. He wants to know, how is the option scene shaping up on LEDGERX? It seems like it's mostly for covered calls and protective puts right now. Is that a correct analysis? Yeah, we just had those folks on the show not too long ago there, Max. And they kind of said that themselves on the show. They said the predominant, I forgot what percentage they threw out there, but it was a pretty lofty percentage of their paper is on the covered call variety. That's for a couple of reasons. They're one of the only physically settled contracts out there. So if you want to use it in the real quote unquote covered call capacity where you could have your Bitcoin called away using the contract, then LEDGERX is kind of one of the only games in town that's regulated and approved here in the US. So they get a lot of that use case. Greg, would you say that's a pretty fair comparison as well, given that you guys work with them now and you see a lot of their flow going up at the lion's share of their flow is still on the kind of covered call and or protective side?
Yeah, definitely. I would say that's absolutely right.
Well, there you go. No mincing around there. No mincing words from Greg. It's definitely mostly on the covered call side. So it seems like you have that right there, Max. Thanks to you and everyone else who wrote in on the show today. All right, everybody. That music means we've come to the end of another epic journey through the world of all things crypto. Touched on a lot of fun things out there, but if there's a product or some aspect of crypto derivatives you'd like us to explore here on the show, you know how to hit us up. All you members out there have your brand new members hotline now. You can get bumped to the top of the list on any show that we do here, so hit us up via that if you want your question moved up to the top of the list. And Greg, I know a lot of folks are beating a path to your door these days, but if our listeners are intrigued by all of these analytics that we threw at them today and they want to go to the source to see it for themselves, where should they go? What should they do?
Perfect. Thanks, Mark. So you can go and visit our site directly at gvol.io. That's GVOL.io. We also have a free weekly newsletter. It's located at genesisvolatility.substack.com. And you can follow us on Twitter at GenesisVol. And lastly, we have a YouTube channel. If you just look up GVOL in YouTube, you'll come across that as well.
Oh, the YouTube channel, a new wrinkle over there. I'll have to check that out over there myself. But I can certainly vouch, obviously, for the analytics and indeed for the newsletter. It's a great read every week. I always check it out to see what's going on, the latest in the activity, the SKEW, the volatility, all that good stuff, and a whole bunch more. You know where to go to kick the tires and light the fires for yourselves. He just said it. gvol.io is the place to go. And on behalf of Greg and indeed myself, I thank all of you out there for downloading, streaming, subscribing, for listening live, for sending in your questions, for all the other fun stuff that you do. Remember, all of our pro members can join us tomorrow for our third now exclusive pro Q&A session. Got the once and future Dr. Bix joining us on that one. Should be a fun one, of course. Coming up on Wednesday, we've got Education Wednesday, double dose of Options Bootcamp, Options Playbook Radio. I know for a lot of you coming to this show in particular, you're somewhat new to the world of options. You're coming through that crypto lens. So Options Bootcamp, Options Playbook Radio, two great shows for a lot of the listeners of this program to check out. Of course, Thursday, the Option Block and TWIFO. Friday, Volatility Views. And then, of course, the return of everyone's favorite options oddities out there before we kick it all off into another week and another episode of the Crypto Rundown.
This program is brought to you by Genesis Volatility, also known as GVOL, home of institutional-grade crypto options analytics. Whether you're trading CeFi options or DeFi options, cryptocurrencies move. Use GVOL analytics to analyze implied volatility, model realized volatility, structure positions, and unlock alpha. For more information, visit gvol.io. That's GVOL.io. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.